Hello everybody and welcome back to the Red Jacket Lawyers channel on German company and corporate law. Today we'll do a recap of our series on capital companies, which finds its end today before we venture into new waters on the next series of videos. If you like what we are doing, please feel free to like and subscribe. If you do have any questions, comments, criticisms, fire away. You have the comment sections below, or you can send us an email or any other form of communication that you enjoy. Over the course of the series, we looked at the various forms of capital companies known in Germany. Basically, the mini-limited company, UG Unternehmergesellschaft, the private limited company, GmbH, Gesellschaft mit beschränkter Haftung, the public limited company, AG, Aktiengesellschaft, and the Europäische Aktiengesellschaft, SIs Société Européenne. Today, we'll go through the four of them in turn, very briefly, just to recap. If you need any more detail, go to the individual videos on those. So, starting with the UG, the mini private limited company. It is designed as an ultra-lead startup facilitator. In theory, all you need is a single euro in capital, and it comes with a few trade-offs. The most important one is that you need to keep 25% of your annual profits in a statutory reserve with a view to building up 25,000 euros in total over time. That, of course, being the statutory prescribed sum of capital you need for a fully grown GmbH. That points us to the most common misstep with a UG, and that's undercapitalization. Because in theory, you may, as I just said, start with a single euro. However, in practice, that won't do, and you run the risk of being bankrupt before the morning of day two. So, bearing that in mind, think about where you're going with your UG and where the business is coming from. Following up in the hierarchy from the UG is the GmbH, Gesellschaft mit beschränkter Haftung, the German private limited company, and its effect the gold standard of German business. The vast majority of German capital companies are GmbHs. They are the default choice for most German startups. They require a statutory capital of 25,000 euros. However, you can start by paying just half, i.e. 12,500 euros, and then accumulate the balance of another 12,500 euros thereafter. They are relatively smooth and easy to operate. You can have single person GmbHs, quite literally, where one person is the shareholder, is the sole director, and is also the person who's doing all the substantive work. Paperwork, accordingly, is relatively limited. You can't invite third-party investors to just buy into the company. You have to sell shares on an individual basis with notarial transactions. And the idea is that way people who do buy shares get forced to look at the company, to consider what they are doing, and to appreciate the risks that may come from a single dude just doing as he feels fit for years before. However, that's of course also the risk. If you're running a company, you do have some compliance requirements that you need to adhere to, making regular filings for tax, etc. So make sure you do those. That leads us on to the AG. It's the German public stock company. It's the big league. It upgrades to access to public markets, and you can issue shares broadly and trade them comparatively easily. However, that flexibility in access to money and investors, of course, comes at a trade-off compared to, for example, the GmbH, in that there is more of everything. There is more capital needed. You need a minimum of 50,000 euros. There is more formal governance. You have to have two different boards, a executive and a non-executive board, so you can't do it all on your own because you have to have a minimum of personnel there. And last but not least, you have to have audits, etc. done. So the admin becomes much more voluminous, it becomes much more complex and costly. And the biggest mistake you can make is to treat a small AG simply like a GmbH. It isn't, and you shouldn't. That leads us on to the SE, Sociétés Européennes. It's the Euro-level corporate player in Germany and, in fact, in all of Europe. It's, from a German perspective, the cousin of an AG. It's the form for companies with international aspirations across Europe and beyond Europe. And to really choose an SE, you need to think big. The minimum capital is 120,000 euros, and 120,000 euros, of course, is more than double what you need for an AG and almost 5 times of what you need for your GmbH. Like with an AG, you have quite a complex corporate governance structure, although there is some leeway, and of course, you have to consider employee participation in the running of your SE. So in conclusion, giving you just short snippy guidelines on what the 4 company types are. Your UG is the ultra lean entry to limited liability company. It's great for testing the waters, basically. You can run a risk and probably control your losses if it doesn't work out. The GmbH is the all-round favorite. It's the backbone of German business, and it's suitable for companies with growth ambitions as it is for companies who've got a very lean and straight trajectory, and it, in a suitable way, balances formality and flexibility. The AG is the heavy hitter. It's ideal, but ideal only if you are gunning for the big leagues, if you look for the public markets, or if you need to structure to raise capital from many hands. Otherwise, it's unwieldy for a small team. And last but not least, distantly related to the AG is the SE. It's the AG's cross-border specialist cousin. It's powerful for a company with a European scope, or where headquarters may want to be mobile, and it is most certainly too complex for early days in smaller companies, even if you can find the cash. If your plan is to operate locally, there is no benefit in doing it. So these are broadly the 4 types of companies. We hope you found this video helpful. We hope you found the whole series helpful. Please come back to us with your comments and like and subscribe us. As always, take care. Bye-bye.